Hey, good morning, everyone. Welcome to the PivotBoss Pre-Market Report. I'm Frank Ochoa, aka PivotBoss, with analysis for the current session, Friday, June 3rd, 2016. Here's a look at the daily time frame of the ES. Right now, we have non-farm payrolls coming out here shortly. That's going to influence at least the early key range that we're going to use, perhaps for the rest of the session. What you see right now is prices holding near the highs of the recent rally. If you recall, when prices were down below 2030, I mentioned that could be a great squeeze opportunity for a push back toward 2100 to 2105. And right at this moment, we are basically sitting right at 2105. We've had a nice significant rally up to that point, and now it's time to see how the market's going to respond to levels above 2100. Are we going to see acceptance above these zones, or are we going to see a little bit more of a squeeze? We do have clear air above 2100 up to at least 2145 half, 2145 half being the 25% expansion of the major August key range, and then we also have the 50% expansion at 2213.75. So there's clear air above if this thing can really get some acceptance above these levels. However, at least on first blush, we may see some sort of weakness and a rotation lower before we do see highs. So we got to see how prices play out up here. Obviously, in an uptrending market, which this has been kind of a quiet uptrending market, prices below the previous month's close are typically offered, and then you see the trap occur. So here's the previous month's close, and you can see prices below that level were defended, and you can see a squeeze higher off that area. So we got to see how prices respond above 2105s, 2100 in general. If there is a failure to see any acceptance above the zone, or we see some sort of rejection day up here, that could be a quick reversal right back to value. So you can see we've had a very nice D-shaped profile develop. Here's 2061, 2049s. Those are both composite VPOC and micro composite VPOC. And again, if we find rejection above 2100, 2105, then that would be an easy call back to value. All right, let's take a look at the intraday time frame for a moment. On an intraday basis, we have a nice uptrending session here. The previous session started with early weakness, and then we saw a rotation back up. That rotation led to further strength, quiet strength the rest of the session. Again, after an aggressive push like that, the expectation would tend to be some sort of early pullback. So if prices are going to continue to trend higher, I would say any pullback into 2099, perhaps 2098, could provide a nice buying opportunity in that zone for a buying push up to 2100, 2106 and beyond. Right now, obviously we have a primary upside target on the day at 2115, but that's assuming the current low remains intact at 2101.75. That's not likely to be the case. I would say any push downward, again, could be a great buying opportunity for a push into the primary upside target, whenever that may be at the time. Let's take a look at crude oil. Here's crude oil, very similar to what we talked about with the ES. We've had a pattern where this thing has been trending higher. And what I mentioned before, especially last month, was that all prices below this previous month's close here were just being absorbed, and then they were going to be squeezed to the upside. And now we're starting to see a little bit of the same here. Here's the previous month's close. Here's some prices below it at the pivot range. We see a higher value pivot range. Pullbacks into the pivot range so far have been defended. And we also have this 47.61, which is the edge of a key range. Very, very solid. I would say, again, right here, these bulls need to get paid at some point. You need to see a push to new highs, because if they don't get paid, I think the stops come out. And if they do, it's going to be a rotation back to 43.71. So right now, I think overall there's an LV in here at 47.22. I think that's a major, major level here that bulls want to keep bid for a shot at squeezing further to the upside. And that would lead to perhaps a move into 51.65 with a shot to see as high as 55 evens, which is the next significant HV and above. On an intraday basis, you can see here that prices sold off after failing to hold above the previous session's high, went offered through the previous session's close, and if we look at the previous session's low price, then obviously you're going to go a lot lower down here, 47.97. So to be offered at the high already and then be offered at the close, typically speaking, would suggest more of a rotation to the downside, back toward the previous session's low. At the very least, we do also have a pivot range to play to, and that's 48.72. That's the midpoint of the previous session's range. This could be a short-term area where bulls may want to defend and rotate it back up. Otherwise, failure to hold that level could bring this thing all the way across the range into 47.97. Let's take a look at gold. Here's gold. We talked about the importance of 12.0830. 12.0830 was what I was talking about last week. I mentioned that if prices couldn't hold 12.36 half, the expectation would be a major test at 12.0830, at which point bulls would want to come in and defend, and that's what's currently happening. As a matter of fact, there's a pattern of absorption going on with the rejection day here off of 1200, and then you look to the left and right of that tail and you see 12.0830 being defended perfectly. That is an absorption signature right there that tends to imply strength ahead. However, we are seeing a period of lower highs day over day. So if that area, 12.0830, cannot hold, I think the next downside levels open up 11.8980 and 11.7490. Let's take a look at the NQ now. Here's the NQ, basically a nice breakout through the narrow range. We talked about 4,400 being the important zone here, and through it would open up a move back toward 45.50. So far, we've seen a push within just mere points of 45.50, and we could see more upside still. The pullbacks so far below the previous month's close have been defended up to the top of the pivot range, and that could open up a little more strength to the upside here. The previous month's high, or at least the April high, is still above at 45.83, so we could be looking at least a little bit more upside toward that target. Right now, failure to hold 44.82 would rotate prices into the LVN, which could be another area to defend. What I mentioned before was that we have two price distributions, a price distribution from 4,400 up to about 45.75, and then one below that area from 42.70 to 4,400. So I think the normal course of action is to come up toward the top of the previous distribution, find some weakness, and then rotate down into 4,400 and perhaps distribute in this zone. So we could see a little bit more strength here, and if we top out or form some sort of rejection, I think back down we go toward 4,400. On an intraday basis, we have an uptrend here that materialized after the previous session's rally here. We were talking about after this rotation, some sort of move back toward the previous close, and that kind of materialized throughout the rest of the day and even pushed a little higher still. Here's 5-day VPOC. If prices can't hold above the overnight pivot, 45.33 half, we could be looking at a retest of value down below, and in the course of an uptrend here, that could be defended for another rotation higher. So we'll see how this comes out. Obviously, a very narrow range here with mere seconds here until non-farm payrolls come out. We'll see how that plays out. Again, whatever impulse move that comes out from the NFP report could be a great key range that we could use the rest of the session. All right, good luck, trade well, and happy Friday.